Thanks, Teddy. And thank you to everyone for logging in. Uh-oh, I have a little window toolbar you can't see, had to move it. My name is Brad Reed, and I am a real life trader. And I would like to encourage you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. What's going on, Albert? I see my dad, Ed Reed, is here, a couple of other real life traders. Thanks for logging in today. Stick around and grab that recording because there are definitely lots of cool topics going on today. Uh, Definitely crucial if you want to be successful as a trader. As Teddy mentioned, I do work for a company called Real Life Trading. That is not my face or my thumbs. Kind of wish it was, but you know, God gives us all our unique gifts and talents. um, at Real Life Trading, we kind of got our start because we offered free education. So if you come over here, click on this free tab, there's tons of education there. Also, if you come over here to YouTube and you have a question, type in Real Life Trading, and then, you know, whatever topic you do. We do a lot of gap trading. So if you look at gaps, there's all this kind of stuff. Looks like right here we have 1,270 free videos out there. So feel free to enjoy. I am one of the day trading moderators. So I'm accustomed to day trading on a webinar with, I guess we've had upwards of 300 people in our webinars before. So I will be watching the chat pane. And if you have questions for me, feel free to type them in. And if y'all would do me a favor right now, the chat pane defaults to all panelists. So only Teddy and myself and Peter right now, the panelists can see your questions. But if you switch it to all panelists and attendees, then other people can see the questions that you, Phil says we cannot switch it. All right, well, then leave it right where it is. I will definitely have mine on all panelists and attendees. And that way you guys can see the answers. And I can also copy and paste the questions so you don't know it's one of my other personalities that I'm responding to. My wife said when we were dating, she likes a man with a lot of personalities, and I'm like, I got plenty. I got several. Cool. So one thing Teddy said I was going to talk about is how the market is just a little bit different than where we've been in the past, right? So if I throw some time up on this chart, pardon my lines, how far? You will notice that we go through bullish and bearish cycles, right? Big shocker there for a lot of the people here are, you know, veteran traders. You know that. You also know that the typical bullish cycle is about 6 years, and we are over 10 years in. And anyone who's been investing since Christopher Columbus discovered America is profitable. And what do profitable traders do is they close out. Maybe they close out small positions, maybe big positions. But what we have found is that through these time periods, I'm going to circle in through here, that we've traditionally focused on stocks and ETFs that are gapping somewhere around 2 to 9%. Anything gapping over 9%, you start getting a lot of profitable traders that begin closing out. They close out very quickly, and you can get fades or reversals. Anything less than 2% doesn't really generate enough excitement for a lot of people to start jumping in and saying, hey, why is this thing taking off? Or, you know, maybe it's gapping down 2 to 9%. You know, why is this thing dropping? Hey, we got to close it out and sell. But in this market, when almost everyone is profitable to some degree, we found that there's a lot more people on a hairpin trigger, right? There have been bearish cycles attributed to certain people tweeting certain things. There has been a sickness, you know, a lot of this recent bearish move was attributed to this sickness in China, not the fact that we just had like an incredible run and we needed to rest. So, you know, everyone's got their finger on the button looking for any excuse to close out a trade. And so we found that the smaller gaps have been working a little bit better over the last several weeks, several months than the big gaps. So we look for things that most people might call a micro gap, 1%, maybe 4%. but some of the larger gaps I've been staying away from. You know, I've got some notes here. One thing else that our market is so extended. I heard Phil Town doing a webinar, a podcast, mentioned that the top of a bullish cycle is typically about 150% of the United States GDP. And the bottom of a bearish cycle is typically when we get down to about 50% of the GDP. The catch is right now we're somewhere around 200% of the GDP. So just one more way in which this current market is very, very extended. Lots of people are profitable. Lots of people are looking for any excuse to click a button and lock it in. Now, one reason our market is continuing to go up is because our interest rates are super, super low. And a lot of the people that are investing in the market are senior citizens and retirees. And back over here in 2006, 2008, well, that's a lot of date on the time chart. Some of y'all may remember that you could get 3.75%, 3.9%, and just a plain old savings account. Just park your money at the bank and just leave it there. And they would pay you over 3.5% just for that. You could get into a money market account, which is, you know, about as safe as they come. And you could make between 4 and 4.5%. If you were willing to put your money in with the bank for a 1 year, 2 year, or 3 year CD, you can make anywhere from 5. I think the top was around 7%. But the idea is that if you were retired and you had a healthy nest egg, you didn't need to invest in the market because you could buy savings vehicles, savings accounts, certificates of deposit that were uber safe and would be delivering you incredible rates of returns. And then if you wanted a portion of your portfolio larger than that, then you could go into bonds. Well, as you guys know now, the interest rates are just now starting to creep back, and some of the really high range for savings and money market accounts are 2%, and retirees cannot retire on that, so they have to invest in the market. So all of this to say, folks, I am watching for the interest rates to get back up to about 3.5%. And I think when those interest rates get to about 3.5 to 4.25%, you're going to see a large number of retirees going from the volatile market back into some of these safer savings and certificate of deposit accounts. And I think that may be the trigger for the next bear market. So put me on record, and if I'm right, you know, sign me up for $1 million book deal. And if I'm wrong, I'll just join all the other people that made a bold prediction and are wrong, right, Teddy? So the question that everyone is here for, I don't think that saying the bullish market or that the market is bullish is a big shocker. The question is, okay, so Brad, so how do you trade it? I like day trading. I'm a day trader. I like being in and out. I do not like overnight gaps. So one of my absolute favorite trade setups is what I call the 5-minute reversal. And kind of what I said before, if you come over here to YouTube and type in real life trading 5-minute, here is a 15-minute video about my favorite day trading strategy. It looks like it's got almost 7,000 views in a year, which is pretty cool. Let's go talk about it. So if the market is profitable, right? If a lot of people are profitable on a certain ticker and it gaps up a little bit, what do you think people are going to do? Right? There's going to be some amount of people that are like, hey, I'm profitable, and hey, it gapped up 2% overnight. I'm even more profitable today than I was yesterday, and they're going to close out. Does that make sense? Type in a Y in the chat pane if you're one of those people that if you're up even more profitable than you thought you were, you like to close out and lock it in. So a great example happened on the SPY just a few days ago. Let me go back here to February 4th. And perfect example of what I like to see is you can see the SPY gapped up, and then what happened in the first couple of candles is some people closed out, right? They locked it in. They said, hey, I'm profitable, I like it, I'm gonna sell. So if, I'll call them weak bulls, are selling, who's left, right? If the folks that like a 2% gap, if they've sold, the only people that are left are the people that are holding for the longer term. And what happens if not only did these people sell, but what if they went short, right? What if they got into bearish positions and they said, hey, it's a big gap. A lot of times the big gaps tend to go back down. Everyone's profitable. I think people are going to sell. I'm going to short some shares here. Well, if it goes higher after those people have shorted their shares, they're going to be losing money. And if they sold to enter here, sold to enter, when it gets up here, they're going to buy to close because they are losing money and they want to stop the bleeding, right? So they sold short, it reversed on them, they're going to buy to close. What do you think some of the weak bulls are going to be doing, right? What about the bulls that closed out there? They're going to be thinking, oh man, I missed it. Oh man, I was wrong. Let me buy again, and I'm going to pile back in. So what I love about the 5-minute reversal is that not only do the weak bulls sell, close out here, but they're not around to close out up here. Anyone who went short is going to be losing money, and they're likely going to be buy to close, which should send it up. And some of the weak bulls that did get out there are likely to pile back in. So I find myself with an overwhelming number of buyers. The buyers overwhelm the sellers, and it sends the stock up. Questions on that? Type them in. But at this point, I want people to understand that the reason I like this strategy is that the sentiment, the overall driving edge is that there is an overwhelming bullish push in this type of market. So what I'm going to do is I'm going to be looking for a small gap on the daily chart, and let's take a look at the daily chart. I have to scroll back to February 4th. So February 4th was this date. Did I get a gap? Yep. And kind of a bonus on this gap is that, see this big bearish volume here from January 31st? See that volume? A lot of people sold on that one. A lot of people sold there. So if you or I sold there, we'd probably have a protective stop somewhere in this range, right? Yes, Mark asks, is the session being recorded for reviewing? Yes, it is. And if you can stick around till about 10:30, Teddy, can you remind everyone at about 10:30 on how to find the recording? That would be great. So yeah, if you sold on this candle right here, you probably had a protective stop right up in here. If you sold to enter on this candle, your protective stop will be a buy to close. And on this gap up there, probably a lot of people buying to close. So right now I know I'm thinking, wow, I'm interested in this. And unfortunately, I was looking at some other tickers on February 4th and I completely missed it. But so I love the gap. And now I'm waiting for some kind of 5-minute bearish candle. There it is. I got a 5-minute bearish candle or an indecision candle, but I did get some flavor of closing right there. And then as a bonus, I get another candle of closing for the second candle. So if I were watching this right now, I know immediately, hey, I want in. And my particular strategy says 3 pennies above the high. So the high of this first candle is 328.37. So 328.37 plus 3 would be 320.40. Bullish stop limit. It's the kind of order that I do. I'd have a protective stop no higher than 1 penny below the low of here. So maybe I'd be 327.69. maybe my protective stop, I'd look for some pre-market support. So let me go back here to the 4th. And yeah, see this really nice pre-market support right down in there. If I had done this trade live, I'd have my stop right there. And then let me take off the pre-market, scroll back to where we are, and then I just manage the stop. And I'm sure everyone here has a trade management strategy that you use. My the purpose of my talk here is to talk about entries. But usually on these types of continuation gaps, I look for about 1 R, and R being my risk unit here. So 1 R is about there. I probably would have had an order to sell at least half right up there. So I guess let me go ahead and draw that. I'd probably put an order about 1 R away for a 50% target. And then the question is, how would I manage my stop? And I love the 5-minute 10 moving average. And on this chart, it's the brown line. So once it retested right there and broke that high, I would raise my stop. And again, the candle I'd be looking for would be that one right there that closed above this former resistance. I would move my protective stop up to about there, just a little bit under this candle. Then I'd get another retest, and once I got one of these candles over here, I would raise this stop again, and I would have a gain locked in, and that's super cool. Would have exited half up here, probably had an order somewhere up here, maybe 2 R for the rest, but on this particular trade, if I had managed it, probably would have moved my stop underneath this guy and then gotten trailed out for, what is that, about 0.8, 0.9 R, but I would have gotten a win on it. Questions about that? How many folks do you guys watch on webinars that only show you their winning trades? This trade works every time, part of the time. I do have a little bit better than a 50% win rate. And what better way to show you how I trade than to show you a trade I am in right now? So let me take these lines off my chart. Actually, you know what? Let me put that line back on. Yesterday, had another gap up, started with a cute little bearish candle. And I believe I did have this order open. It came down, I was like, yay, I'm about to get filled, and then kaplunk. It went through the protective stop before hitting my entry. So I just canceled it. So if it goes through your stop, you can either lower the stop or cancel the trade. And here is MU. Looks like I am about to get stopped out for a small loss on this one. So a good example of how to manage a trade in real life. Actually, that was an accident because the name of the company is Real Life Trading. But MU had a cute little gap up today. Just right now, it's only at 1.8%. So plenty of room, plenty of momentum for this thing to continue. Yesterday was a selling day, right? See selling, pretty good volume on that selling. So anyone who sold to enter, right? Maybe some people thought, hey, this thing's going bearish. It came up, it's ready to go down, and they sold yesterday. Well, the gap up today meant they would likely be buying to close. And anyone who sold yesterday but said, oh man, now it's gonna go higher, they're buying to get back in. So what did I see in the first 5 minutes? I saw a bearish candle. And so I put my entry 3 pennies above the high of that. The high of this candle is 58.12. My entry was 58.15. And then when it came down, as you can see, the second 5-minute candle came down a little bit, I canceled the order. But then after about 20 minutes in, a gorgeous little hammer candle right there. I put my protective stop 1 penny below this lower wick. I believe there was some pre-market support. Yeah, so there's a pre-market support there. This one was lower, so that's why I put my protective stop down there. Had a nice little run, wiggling there at this volume weighted average price. It is 11 a.m. and that's about when the 5-minute 20 moving average begins acting as support. Let's see, the low of that candle is 57.75. The low of this candle is 57.77. I am getting some flavor of a bounce, but I'm going to go ahead and tighten my stop up to 57.74. Let's see, how much time do we have left on this candle? Got about 2 minutes. Yeah, I'm going to go ahead and do that. So 57.74. Let me make this into an old stop, an old stop. Let me go over to my broker. Sorry, y'all, for taking a break, but hey, who wants to hear someone just talk about it, right? You want to hear someone that's actually doing what they're talking about. And also, one thing I forgot to mention about real life trading is that we have we use Slack to share trades. And so I can come over here and say, tightening my stop on MU. And then I can post a picture. And Blake Anderson is running the day trading room right now. Looks like he got a small win on an AMD day trade, but you can see we post our wins. Angela just got 9R by wrecking Google and Tesla. And yeah, folks share trades here. That's a feature of real life trading as well. If you want to come over and check that out. So MU, I don't know if I'm going to win on this, but I can guarantee you I'm going to lose small if I lose. Groovy, let's look at another one. Texas Instruments. I had an order open on Texas Instruments today. So let's look at the daily chart. So yesterday, Texas Instruments had a huge bullish candle on big volume and it gapped up. It actually opened above the high of yesterday. So this orange line at 132.91 marks the high of yesterday. And today opened at 133 even. So I'm thinking, hey, it had big, huge bullish momentum yesterday. Why should it not continue today? And so on this first little candle on the 5-minute chart, lo and behold, I got a neat little doji. Dojis indicate indecision, and the fact that it had a bearish body on that doji said, hey, I had a little bit more selling than buying. But yeah, I think a lot of people are trying to figure out what to do. I think some bullish people that are profitable that held overnight are selling. And then of course the second candle confirmed that people were in fact selling. So I love my entry there. I thought if it came up higher, then it would run and continue bullish. Clearly it did not, and that's fine. When it came down and took out that low, I canceled my order. If you have any questions, go ahead and type them in the chat pane. One stock that I have found since the market opened, but I wish I was watching it this morning, was VSLR. So one question is, does VSLR here have good bullish momentum? I think we can say yes, it has been going bullish. Came up here to a resistance, had a nice retrace into that 50 exponential moving average, and it's cruising. So it gapped overnight, right? It closed there, opened there, kind of like we talked about on the market yesterday. I love the fact that it opened above anyone who sold short on these 2 days, because, hey, if this were any of us, right, we'd probably have a protective stop somewhere around in this range. And the fact that it opened above that high means it's going to means that it's going to be triggering their protective stops, and yeah, they will be buying to close. And when you look at this on a 5-minute chart, look what happened on the first candle. People were selling. Did I say buy to close? Yeah, buy to close. So the weak bulls, the ones that are profitable, the ones that got in down here are saying, man, there's a resistance up there. I'm going to sell at resistance. The rest of it are saying, hey, you go right ahead. we're going to buy there. And as it continued higher, those protective stops got triggered. And yes, it went higher. Ashish says, how many trades do I lose in a row? Let me copy that for everyone else. Ashish, my win-loss record is about 46%. Here's a record of all of our trades. Yeah, 46%. So I lose on more trades than I win. But total since 2015, Real Life Trading as a company, we're up 203 Rs. Let me go to my personal my personal journal on another computer I have over here. Yeah, my win-loss record is 43.6%. And I mean, I'm not going to tell you I've never gone on a losing streak. But usually if I lose on more than about 4 or 5 trades in a row, I'm starting to reevaluate and I'm starting to say, hey, I think the market has changed. You know, the market works in cycles, and I've probably got about 8 or 9 different strategies that I use. And if one particular strategy is losing 4 or 5 times in a row, I'm going to get real hesitant to trade that one again. And I'm going to start switching to one of the other strategies and focusing on one of my other strategies that's winning. So the market works in cycles. We all know it goes ups and it's downs, and sometimes it runs early in the morning, sometimes it retests, and then it breaks later in the day. And I think to be a successful trader in any market, you have to either learn to feel the ebbs and flows of the market and switch to your strategy that's working in that particular market cycle, or you have one trading strategy that works for you, it's your go-to, and if the market is not working with your particular strategy, just wait, just paper trade, just trade fake money till you get 1 or 2 winners in a row, and then start going back in with your real money. But that's a great question. I appreciate you asking. And Ashish, if I did not answer your question, please type in some more and I will do my very best. I think my record is about 10 losses in a row, but they were small losses. Wendell says, do you day trade stock options? Sometimes I do, Wendell, especially if I think I'm going to hold it overnight, which I know is not the definition of a day trade, but some of the bigger names, Apple, the markets like SPY, Amazon, Netflix, let's see, I can't afford many Amazon options. Those are expensive. But when I do day trade options, I trade the weekly options. SPY has options that expire on Wednesday or Friday. So I'll do either one of those. But if I have more than about 2 or 3 days on that option, let me start over. If I have more than 3 days, I rarely day trade the option, just because I don't get enough move in the option price compared to the stock price. But if it's Thursday or Friday, 1 or 2 days before expirations, yeah, I love to do that. And the reason is that if you're right with an option, you can make a lot of money really fast. But when I day trade options, I use the weekly options with 1 or 2 days on them. So if I were trading this one, my entry would have been 3 pennies over the high of that candle. My protective stop would have been down below this support down here. And that would have been my entry on VSLR. And one of the cool things about it is that, hey, if I miss it, I can get the retest. So if I miss this breakout and I had seen it, I got a real strong close above these resistances, yeah, I could take that on a buy limit. You're welcome, Wendell. And if you want to see the strategies that we use for trading, for day trading options, you come over here, Real Life Trading, day trade options. Let's see if the one comes up about day trading with weekly options. And I'll copy this link address for you and put it in the chat pane. I think I can. Let's see, all panelists and attendees. Day trading weekly options. Groovy. So let's see. I talked about some trades that I had done. Let's see, IONS gave a great setup today that I did not trade. Oh, look. Oh, yes, this is why I had this one on my list. Want to talk about another time in which I will cancel or not put on this trade. And IONS had a gorgeous gap today. Now it's a little bit bigger than what I usually trade because right now it opened there and it's down to there. It's up 4.5%. So it closed there, opened there. That was more than 4.5%, maybe 5 or 6%. So we're getting on the upper edge of what I feel comfortable trading. Sorry, I'm drinking coffee because I love coffee. I recently discovered coffee. I'm 45 years old and I kept trying to avoid, but I love coffee. I've been drinking coffee. I like coffee. Did you catch that? Anyways, IONS. So it gapped up and it's pulling back, but let's take a look at the first 5-minute candle. Gorgeous bearish candle there in the first 5 minutes. If y'all been following my strategy, you're thinking, man, Brad's probably going to put in an entry 3 pennies above the high of that. 62.9 would have been the bullish stop limit entry. He probably would have put his protective stop no higher than 1 penny below the low of that candle. Let me turn on extended hours. Some really neat looking support down here at 60.59. So let me put that down at 60.58. And then we can say, we can look at and say, hey, where would 1R be? Where would the first sort of profit taking take place? And if our entry is 62.90, the protective stop is 60.58. That's a 32-cent risk, 32 cents of reward puts the first target at 62.22, if I did that math correctly, 63.22. Excuse me. Nope, I did not do that math correctly. It's $2.32. So $4. 65.22. Sorry, I'm trying to talk and do math at the same time and without a calculator. So that would be target 1. And if we switch over here to a daily chart, we can see that, dang, that's asking old IONS here to put in a ginormous candle to get up to that first target. And I like to place my trades where I've got a reasonable shot at hitting the second target. So again, first target was this distance there. And I like to have 2R, whereas my risk be 1 risk unit. I want my reward to be 2 times that. Yeah, it's not going to do that, right? This thing would have to have some sort of freakishly awesome, amazing candle. I'm looking back almost a year's worth of data here, and oh, I do see maybe 1 time in about the last year this thing ever made a candle big enough to hit that target. So I'm going to cancel this one just because that first 5-minute candle was so big that I think it would be highly unlikely that it would give me a good reward risk. So here's another example of when I would cancel it. So MU is about break even right now. I have a huge potential to win on that one, a very small potential to lose. Texas Instrument was a cancel. VSLR would have been an awesome winning trade. IONS would have been a cancel. I looked at the SPY. That would have been a winning trade. I do have a few bearish trades set up over here. And AMD, let's see, I didn't do any bearish trades today, so I pulled up my log, trying to figure out what date this was. It's up there, October 8th. So on October 8th, you can see AMD made a very small minor gap down 2 bullish candles in a row indicates buying, and then it gapped down below those. So anyone who bought to enter there is now losing money and likely to sell to close. So the fact that it opened bearish, it gapped down below those, is what made me want to trade this thing bearish. Now, if someone is long, they own shares, and it gaps down, the way they close out is they're going to be selling. But if they are profitable, if they are any one of those folks that have to close. So I want to wait for those first couple of bearish traders who are profitable to buy to close before I go in. So here is the 5-minute chart going back on October 8th on AMD, and you can look this up. I got a bullish candle, not only just a bullish candle, but with that long lower wick right there, that indicates buying pressure. And yeah, that is some of the weak bears buying to close. So what I'm thinking is, if it goes any lower than this, then the weak bears who just got out might get back in. Any of the bullish traders that bought on the last 2 days, and I just showed you that, they are going to be selling to close. And so I want to sell to enter, right? Because I think there's going to be an overwhelming number of sellers on this day on AMD. So that's exactly what I did. I put a bearish stop limit entry 3 pennies below the lower wick of this first 5-minute candle. I put my protective stop at the top, and let me show you how this thing finished up. So it made a big run, and yeah, I got trailed out for a nice win as it came back up and retested, which is a good thing that I put my stop there. Let's see, here's the 5-minute 10 moving average. You can see it rolled right there, came back down, so I lowered my stop, and I got a nice win on that AMD trade. I do have about 5 minutes left, so if you do have questions, let me know. Here's a day where I traded Tesla bearish using the 5-minute reversal. This was on October 3rd, and this are you guys old enough to remember when Tesla was in the 200 range? And it's what, like 700 today? Crazy. Shout out to my boy Mandeep Sidhu, been a friend of mine for a long time. He made massive money on Tesla going bullish. Great job, Mandeep. Tesla, so on October 3rd, the week before, it had a nice consolidation up here, looking a little bit more bullish than bearish with the higher highs and the higher lows. So I figured some bulls were piling in. And yeah, if I were trading Tesla on this day, if I were in bullish, I'd probably have a protective stop about where that orange line is, maybe where the daily 50 exponential moving averages, that's where this purple line is. So it gapped down. I'm thinking the bulls that were in it may be selling to close out their positions. So I think it's going to have bearish edge and shoot down here close to the 100 simple moving average. But I do want to wait to see if any buyers are going to come in. And sure enough, you guys know, because I'm talking about the strategy, the first 5-minute candle was a buying candle. So these are bulls getting in saying, hey, it's value, it's on sale, I'm going to buy it and take it back up. And if those bulls are wrong, they're going to be selling to close as it goes down. Maybe there were some bearish traders that said, hey, I'm profitable, I'm going to close out. And for any rate, there was buyers in the first 5 minutes. So I put my entry 3 pennies below the low of this candle. I put my stop, looks like 1 penny above that 50 exponential moving average on the daily chart. And it came down into this 100 daily simple moving average. I took half, formed a Morningstar reversal candle, and I exited the rest for a nice win. Ashish is asking me, is it right to manage or exit early on the changes of the market sentiments? Yeah, Ashish, I think that's a great point. If you get into a trade and you're wrong, or like I'm in on MU right now, and it looks like I'm right, woohoo! Yeah, lock it in. And yeah, if you get into a trade and you say, hey, you know what, this is not doing what I thought it was going to do, yeah, exit, lose small, lock in a win. I can tell you right now, what time is it? 11:27 Eastern. So I got about 3 more minutes. If I don't get a pretty strong push above this candle right here, I'm just going to exit for a small win. But just like a baseball player would much rather have a lot of base hits than a lot of strikeouts, you know, you win at baseball by making base hits and by making small wins. And in fact, Ashish, you talked me into it. I'm going to exit 10%, 2 pennies below the high of the day. If it gets up to 58.31, I'm going to exit some, lock in at least part of a win. And I appreciate you helping me manage my trade. So if you have any questions, feel free to email me. Let's see, Teddy, if I'm not allowed to put my email address in the chat pane, let me know quickly. But hang on, let's come over here. Brad at reallifetrading.com is my email address. Reallifetrading.com is our website. And we do have a special deal for those folks that are here. If you want to join our webinars, if you want to come and trade live with us, if you want to ask us questions, if you want to interact with us, if you want to talk to other people that are sharing trade ideas, you get access to all of this. Join us. Come over here. It's $349 a month for the swing trading room, the day trading room, our weekly options newsletter. You get access to Slack. You get to see all of the trades that we have going on live right now. And I guess I can't show you those because I get in trouble. But here are our trading results going back. Let's see. We started tracking these February of 2015 for day trades and July of 2015 for swing trades and February for credit spreads. We win more than we lose. We win big, we lose small. We trade as a team, we help each other out. We've got a family here. Yeah, and we help each other out. Thank you all for your time. Any questions, type them in. Teddy, what is the next process? Anything you need from me? My clock's showing that my time is done, but hey, if you tell me to go, I'll talk about one of my other strategies.
Oh, no, it's fine. Our next presenter is online right now.
Awesome.
So,
awesome.
Yeah,
Well, Teddy, thanks for.
I'll send you an email over about the next process after we're done with this.
Perfect. Folks, thanks for listening to my talk. Thanks for being here. Thank you all for being real life traders, and trade on logic, not on hope. Back to you, Teddy.